On your journey to financial wellness, if your financial situation changes and you have trouble making your student loan payments to launch servicing, there are 4 terms you definitely need to understand. Let's start by talking about the terms deferment and forbearance. Deferment and forbearance are agreements between you and your student loan lender that, in case of financial hardship, allow you to reduce or postpone a payment on your loan for a designated period of time. In other words, both deferment and forbearance can postpone your student loan payments when you can't afford them. Furthermore, both forbearance and deferment extend your assent repayment term, meaning your interest will continue to accumulate on your loan balance during this period of deferment, so you can potentially owe more interest than before. So what is deferment and forbearance? If you choose a deferred repayment plan, your loan will go into repayment either 6 months after you graduate, your enrollment status goes below half-time, or you drop out. If you still need to postpone payments beyond those 6 months, you may be eligible for the active duty military deferment or in-school deferment or residency internship deferment. If deferment is not an option for you, Ascent also offers 2 forbearance options. Temporary hardship forbearance may be granted during periods of financial difficulty from a minimum of 1 month to a maximum of 3 months. And administrative forbearance can be used temporarily while researching borrower disputes or for other circumstances as approved by the lender. Whatever you do, doing nothing isn't an option. If you know you're going to miss a payment and choose not to contact launch servicing to work out payment arrangements, these late payments may stay on your credit report for up to 7 years and interest will continue to pile up. If you choose not to request forbearance or deferment on your student loan payments and you make a late payment, your student loan will be considered delinquent. When your student loan becomes delinquent, it can have negative effects on your financial wellness, such as hurting your credit score. If your student loan remains delinquent for 9 months, you could enter default, but we'll get into this a little later. The worst thing you can do is ignore a payment. If you think you may miss a payment, pick up the phone and call launch servicing ASAP to review your options. You might be able to request deferment or forbearance or even adjust your repayment plan, but you won't know unless you make that phone call. Making a late payment on your student loan, even just once, can negatively impact your credit score and risk your chance to qualify for other financial benefits like FAFSA. One way to help ensure you are never delinquent on your student loan payments is to enroll in automatic payments. An automatic payment is a scheduled payment from your bank to pay a recurring bill on your student loans, helping you stay financially well. If your student loan payment becomes delinquent and you haven't requested forbearance or deferment, your student loan will enter default. Defaulting on your loan is very serious and it can impact your financial wellness for years beyond college. If you default on your student loans, a few things can happen. It will show up on your credit report for up to 7 years, making it difficult to get credit cards, a car loan, or rent an apartment. You may be required to immediately pay the entire balance of the loan, plus any interest accumulated on the original loan amount. With a federal student loan, your college may withhold your academic transcripts, impacting your ability to apply for graduate school or apply for jobs that require college transcripts. Bottom line, pay your student loans on time. If you have trouble remembering when your bill is due, set up automatic payments with launch servicing. Plus, you will get a discount if you set up automatic payments with Ascent. As soon as you think you might have trouble making your student loan payments, contact launch servicing to see if you can pause your payments under their deferment or forbearance policies.